S&P 500 mutual fund or index fund, my challenge with that is the yield is low. It has a bunch of stocks in the index that don't even pay a dividend. So eventually, if I need to live off that income, it's just not going to be enough. And I'm going to have to dig into the principal. Hey everyone, this is Ian. I'm back with another video about dividend growth investing. One of you asked me a question. It was about the S&P 500 versus dividend-paying stocks. And today I want to answer that question. I want to discuss the pros and cons of each of these options, how they are similar and mostly how they're different. And so really what the question was all about is, hey, I've got some money, I want to invest. Should I go and put it in dividend-paying stocks, or should I put it in the S&P 500, or maybe even do both? And today I want to address that question. So let me get my notebook here. Wrote down a bunch of notes about this very question. And first and foremost, let's start just with yield. So currently the S&P 500, which is an index, and it's an index of the 500 largest stocks that are traded in the United States. It's a world recognized stock index, but it's just that, it's an index, so it's a combination of 500 different stocks. And the average yield of the S&P 500 right now, as of today, is 1.91%. Now, as a dividend growth investor, that's pretty low. Am I going to be able to live off of 1.91%? Probably not. When I buy new stocks for my dividend growth portfolio, typically I'm targeting a yield of around 3%. So sometimes I buy stocks below 3%, sometimes above, but when it all blends together, typically my current yield is about 3%. So for me at least, my goal is to never sell stock. It's to buy stocks, it's to hold them forever, it's to see the dividends increase over time, it's to take those dividends and live off of them, and eventually the dividends will cover my living expenses. I just don't see that happening with the S&P 500. The reason for that, again, is it's an index that contains a lot of stocks. Some of the stocks in the S&P 500 don't pay a dividend at all, and they never intend to pay a dividend. And so by taking the average, a blend of everything, I feel like if you're an income investor, if you're someone who is investing for yield, for dividends, you're putting yourself at somewhat of a disadvantage because the yield may never meet your expectations. And so that's point number one, S&P 500 versus dividend stocks. Point number two, let's talk about fees. S&P 500, there's a few ways you can buy it. You can buy it as a mutual fund, or you can buy it as an exchange-traded fund. So an exchange-traded fund is basically like a mutual fund, but it trades on a stock exchange. So you can literally buy it through a broker account directly through a stock exchange. You're buying shares in that fund as if you were buying stock. So very similar to a mutual fund, but it's just exchange-traded. The thing about mutual funds is they all charge fees. Even if you're buying an S&P 500 index fund, it still has fees. The fees are going to be a lot lower than a managed mutual fund, which is good. Typically, I'm not the greatest fan of a managed mutual fund because of the high fees and because most actively managed funds fail to beat the index, the S&P 500. So oftentimes it's better just to go with the index. But the fact of the matter is there are fees. Now, when you buy dividend-paying stocks, you can really minimize your fees. Now, if you go with a traditional brokerage, there's a fee to buy and sell, but once you're done paying that fee, you're done. You hold it forever, no more fees. If you're really looking to take a frugal approach, and I just did a video on this about how you can invest with as little as $25 a month, commission-free, there are still dividend reinvestment plans that you can buy into where the company pays all the fees, so you don't have to pay any fees. So when you compare the S&P 500 versus dividend-paying stocks on a fee basis, I believe that the dividend-paying stocks are more advantageous for the fee-conscious investor and someone who doesn't want to be paying fees. And interestingly enough, I read a book by Tony Robbins called Money. This is a book I read a few months ago, and Tony really describes how fees can eat alive. It can just eat away your investment returns over the years. So you want to minimize fees, especially ongoing fees. Whereas with dividend-paying stocks, because it's such a buy and hold strategy, you're buying the stock, you're holding it, you're going to wait 10, 20, 30 years to get some massive amount of dividend income over time that will compound. It will be a snowball effect. because of that strategy, it's a strategy that lends itself to lower fees, which is something I really appreciate. So moving on, let's talk about this. You may work at a company. Maybe they offer a 401k. Personally, I used to work in the corporate world. I had access to 401ks. I think a 401k is a reasonable vehicle. I think in that case, you're kind of partitioning your portfolio, or you may consider partitioning your portfolio. Maybe you have your 401k, and then on the other side, you have your dividend stocks. And when you have a 401k, typically the investment options are somewhat limited. Oftentimes, you have mostly managed mutual funds. If you're really lucky, they might have an S&P 500 mutual fund in there, index fund. That is the case where if someone is actively participating in a 401k, and those are all the options available are only mutual funds, that's the one case where I am a huge proponent of the S&P 500 index fund. As I mentioned earlier, most active managers in mutual funds fail to outperform the index, so it's better just to buy the index. It's more stable, it's more likely to have better returns over the long run. That's what all of the historical data shows. And obviously the historical data is not a predictor of the future, but I take comfort in that. So that would be the one case where, in my personal situation, if I did have a 401k, if it did happen to offer an S&P 500 index fund, that's where I would be all over it. But in my other portfolio, where I'm looking to replicate and replace income that I earn from working, and I'm trying to drive income to pay my living expenses through dividend-paying stocks, I just don't see a place for the S&P 500 index fund, or quite frankly any other mutual fund in that world. Another point. So this is important. It goes hand in hand with my first point about dividend yield. I never want to dig into principal. Once I put money in stock, I don't want to sell it. And the fact of the matter is you can do that with dividend stocks, because the dividends will increase over time, and eventually I will be able to live off of that dividend income. S&P 500 mutual fund or index fund, my challenge with that is the yield is low. It has a bunch of stocks in the index that don't even pay a dividend. So eventually, if I need to live off that income, it's just not going to be enough. And I'm going to have to dig into the principal. So I'm going to have to sell my shares. I'm going to have to use dividends and principal to pay for living expenses. And that just goes against the grain of my very kind of financial being. Everything I'm about in the financial world, it just goes against it. And so that's why I personally do not like S&P 500 index funds, mutual funds, for the goal that I'm trying to achieve, which is passive income via dividends. Something else worth noting, when you buy the S&P 500 index fund, you're buying 500 stocks at once. You can time the market a little, like maybe buy it when the market has dipped. Macroeconomic events have caused the entire market to dip. But the beauty of buying individual dividend-paying stocks, like I have in my own portfolio, is that when I buy, I don't have to buy all of them at once. I can just buy the ones that I view at that time are either really important to my portfolio, to the mix, or more importantly, are undervalued. And so I feel like when you're buying the individual dividend-paying stocks, I can look not only at macroeconomic events, but microeconomic ones too. They're specific to the very companies that compose my portfolio, and it allows me to pick up stocks on the cheap. It allows me to get value. Whereas with just buying an index fund that's everything under the sun, it's hard to get value other than if I believe macroeconomically the entire thing, all 500 stocks, are undervalued. So I do believe that's a benefit, again, to someone who's taking the dividend stock approach. So one thing though worth mentioning is I love investing, and it's a passion of mine. It's a hobby of mine. It's something I think about all day, every day. I'm an active investor, so because I'm an active investor, that lends itself to individual stocks and to the dividend approach. Let's say I didn't like this stuff. Let's say personal finance was boring to me, it scared me, I didn't like it, I didn't want to spend time with it. That is the perfect scenario where someone in those shoes may do really well with an S&P 500 index fund. So if you really never want to research individual stocks, you don't want to take a more active approach in your finances, you have other things that occupy your time, you want to get your money and just put it into something, that would be the case, quite frankly, where S&P 500 index fund could do quite well for you. So I'm not trying to completely discount these index funds. I think they have their time and place. I think they're great. They're a lot better than the actively managed mutual funds of yesteryear, of the past. And so there is a time and place, but I'm just saying for my personal situation where I am looking to drive dividend income and live off that income without ever having to sell the principal, S&P 500 isn't going to cut it for me. I have to go with the individual dividend stocks, and that's what my channel here on YouTube on PPC Ian is all about. So if you are interested in learning about dividend-paying stocks, how you can yield a great return on dividend-paying stocks without ever eating into the principal, having the opportunity to live off of dividend income that comes into your mailbox weekly or monthly, maybe even daily if you own enough stocks, that's what my YouTube channel is all about. So thank you so much for the question. Really appreciate the questions. Thank you for the support here on PPC Ian. Please keep the questions coming because they fuel these videos. They give me ideas for future videos here on PPC Ian. Before I leave, just a quick disclaimer. I am not a licensed investment advisor, and this is not investment advice. I'm just sharing my passion here on YouTube, my passion for investing. If you would like to go out and start your financial journey, start buying stocks, please do reach out to a licensed financial advisor. So this channel here, these videos are just for your fun and entertainment. Thank you so much for watching. I will see you in the next PPC Ian dividend investing video.